this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Hey everybody, we're going to do today's Forex market preview. Today's May 12th, 2013. It's a Sunday. And we're going to talk a little bit about what happened in the market last week. We had a very whipsaw market last week. We had some really great technical trade opportunities, several which got stopped out because we had some serious shifts in the fundamental outlook of the market. Now, one of the biggest things that happened was the United States Fed is talking about doing an $85 billion bond buyback program to basically stimulate the economy, which basically changes the environment from what we call a risk-on environment to a risk-off environment. Let's talk about that a little bit. One of the largest currencies out there that's being traded is the US dollar. Everything pretty much revolves around the US dollar. Now, there's different pairs like the pound yen, all this kind of stuff, but everything revolves around the US dollar. So when international investors, foreign investors, domestic investors are putting money in because they have their faith in the US dollar, usually what will happen is pairs like the Aussie dollar, the Aussie yen, a lot of yen cross pairs will tend to pull back because the yen cross pairs, the Aussie dollar, Aussie yen, those pairs tend to be more what we call risk-on based currency pairs. So they're a little bit more risky, but they are much higher yielding. Whereas US dollar is considered more of a safety net type of currency pair. So when you start seeing a lot of negative news coming up about the US dollar, what happens? Investors are going to put their money somewhere. They start pulling their money out of US dollars and putting them into the yen cross pairs, especially the Aussie yen, especially because the Aussie dollar for a long time has had the highest payout for overnight interest rates, and then the yen usually has the lowest, and so therefore you usually get paid the most amount of money by putting in Aussie yen. So let's take a look at some of these yen cross pairs, not the dollar yen. We'll talk about the other one, that in a minute, but let's get to looking. I just want to show you real quick. The pound yen is going up over 3,000 pips in the last, well, actually more than that, yeah. But approximately, let's see here. What's it? 1, 2, 3. I'm trying to count how many months. 8 months. In the last 8 months, 3,000 pips. That's pretty massive. The euro yen. Let's look at that on the daily chart. Same type of thing. Actually, even since January this year, this pair has gone up almost 2,000 pips. Aussie yen. Let's look at this one. This pair has gone up 2,500 pips since October of 2012. So we're talking about some significant trends on these pairs. And so what's happened is because the US dollar has been really negative for the last year. A lot of people are losing faith in the US dollar, but the Fed announcement that just came out is really going to boost the US dollar. Now, here's the trick. For how long? And that's really the big key here. Is this just an emotional, quick market movement that's going to last for less than a week, which we see those all the time. We see huge moves and then the market ends up settling back in? Or is this going to be a move that's going to be literally change the trends in how the market is trading? And that's the trick of what we don't know. So what we need to really be careful of is the fact that the market is in a potential shift right now. that it may be more investors may be pulling money out of yen cross pairs, especially the Aussie yen, Australian dollar, and putting it more into US dollars. Now, last week we had an Aussie dollar trade that was an unbelievable opportunity. The pair had been trending for quite a very long time. Right at this 101.50 mark, we took a buy position at 101.65, which was an excellent trading opportunity. If you look historically, that is a major key level, and to be able to take a trade off of the weekly chart like that was a great opportunity. But the fundamentals, like I talk about in some of our other videos, the fundamentals will always overcome the technicals. Now here's what I'm talking about here. This is the technical analysis of what we're doing on this chart. You can see technically the 101, the 1.0150 mark has been a strong key level, and it should have had a bounce off here. In fact, if you look at the daily chart and the 4-hour chart, you'll see that it did have a bounce. But unfortunately, what happened, the fundamentals, which is the news revolving around the Aussie dollar to US dollar, overwhelmed this pair and forced it down into a deeper position. And I think it's going to continue getting deeper. So what happened is the US dollar, obviously, first thing that happened was the the Royal Bank of Australia announced a 0.25, which is 25 basis point rate cut on the overnight interest rate differential, and which caused the pair to drop. Now the market had already priced that in, but it was still forced it down a good 100 pips, which took us into our trade in the first place. What took us out of our trade was the fact that the US dollar announced some extremely US dollar positive news. What happens? And the Aussie, see up here, the Aussie dollar. If the Aussie dollar strengthens big time, it's going to weaken the entire pair. So both of those news announcements killed the Aussie dollar, US dollar. Now we're at parity. Parity means equal. When this hits 1.0000, that means the Australian dollar is exactly equal to the value of a US dollar. Okay, and as this pair drops below parity, that means the US dollar is worth more than one Aussie dollar. Okay, so we got stopped out of that trade because the fundamentals overblew that trade, and I do expect that this thing is going to continue dropping down even further. I wouldn't mind. I wouldn't doubt if we could see this thing run all the way down to 0.9800 range, a couple hundred pips. So I'd be definitely looking to sell this pair at this point because I think we've broken solid into this next range. So I would sell at 101.50 if we can get the price back up there. I personally think it's going to continue moving, which we may not be entered into that trade, but we could have a pullback on this downtrend. On the daily chart, you can see exactly what I'm talking about. Price just exploded down over the last few days. It just got absolutely killed. Price went as low as 99.60 and then bounced back up, which is normal, typical at the end of the day, especially on this pair. But I do expect that over the next couple of days that we are going to see price continue to dump on this pair. So before we get too far into trying to determine what trades we're going to take, let's look at how, because we're talking about how the US dollar is strengthened against a lot of the pairs. Let's start taking a look at how it's dealt with some of these pairs. Now we know, obviously, the Australian dollar is taking a dump. Let's look at the New Zealand dollar. Same thing. New Zealand dollar is taking a big push down. New Zealand dollar is very correlated with the Aussie dollar. So when you have a lot of Aussie dollar negative news, it affects the New Zealand dollar tremendously. The euro, it wasn't too significant. However, when was this here? This would have been on the 9th. So Thursday. Since Thursday, this pair has dropped 200 pips. So obviously, it is being affected. The pound against US dollar, same type of thing. Oh, that's a weekly. Hold on a second. Yeah, that's not working right. Gotta get this data thing out of the way here. Alright, so since the 9th, Thursday, the pair has dropped. Let me see, it was at 55, almost 5,600. So it's dropped 300 pips, almost 300 pips. Dollar Swiss, of course, that trade is going up tremendously because the dollar is the first pair in this currency, so this thing is exploded upwards. And the USD CAD, same thing, exploded upwards. In fact, we did have a buy position here to buy this pair at 1.0010. Let's look at this. Price came down to 1.0013, 3 pips away from us taking us into our entry, and shot up 150 pips. So 140 pips. That stinks. We 3 pips off from taking that trade. That would have been extremely nice. But anyway, so we are seeing across the board that the dollar is just exploding up. But what we don't know, this is the big trick. This is part of what you really have to focus on in the FX market, is we have to determine if this is just a short-term deal where it was a news announcement that's going to cause everybody a bunch of ruckus, or is this going to really be a trend changer? And we won't know that until the next couple of days. We'll really start watching some of these pairs. So normally on a Sunday, I do an analysis and I choose anywhere from 5 to 10 potential trade setups for the week, and we're going to be very cautious on what we're taking trade opportunities on, especially on the dollar cross pairs, because of the fact that we are not sure yet on the long-term viability of this $85 billion bailout deal that they're talking about. Not a bailout deal, but a bond buyback thing. So let's get into the analysis. We'll just at least start talking about what we're seeing. On the weekly chart, the pair has been trending up continuously since July of 2012. Up, pull back, up, pull back. Up slightly, just not a huge amount, and then a little bit of pullback. But here's one thing you will notice in a trend, that you always have a continuous level of higher highs and higher lows. We got a high, a low, higher high, higher low, higher high, higher low, and then you have a lower high. In other words, this high is now lower than this one. So we could be sitting here at a potential reversal in the trend, which could continue this overall long-term downtrend. And see that, okay? And this could be a downtrend with a long pullback, and now that we're working our way back down. That's what it looks like on the weekly chart. On the daily chart, let's zoom this in. We're kind of at kind of at the same thing. It's been just going up, 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 and now it's kind of rounding over. So based on what we see over the next 2-3 days on the US dollar, we could see that this pair continue to drop down. I know some of our free members may have taken a trade at 1.3012. If you did, I would just dump that trade. We did potentially suggest it on a video that may be a good opportunity, but you might want to just get out of that trade if you did get in it. Though it is Sunday night, we could see a pullback back up to that level where you could close at a break even, but I wouldn't want to take the chance. Let's just go look at the pound. Because of that, I don't see an opportunity on the pound. On the dollar. I'm sorry, on the euro, because of the unsure market conditions that we're dealing with right now. The pound, I think we have definitely seen a turn here. This thing's been trending down for a while. And if you want to pull a Fibonacci from here, from that high to that low, you can see the price pretty much pulled up to the 50% retracement level, which the pound and the euro love. Hesitated right to 50% retracement, and I think we're on our way down. So what I would definitely be looking for is a sell at these key levels here at 15500. If we can get price to shoot back up. It may not. We may have a continued dive down in which we don't have an opportunity. Now there's also this base level here at 5400, but it's not as strong as the 5500 in my opinion. But you could take a sell position at the 5400. But I'm going to guess that if the market's going to continue pushing down and that this dollar positive news is going to force it down, then any significant pullback, a retracement upwards, could be an opportunity to take a sell position, especially if it hits a key level. or even slightly beyond it. So I may sell this. I'm going to watch how this pair trades over the next day. I may take a sell position there. Price could honestly run back up to 15400 mark in that range a little bit more, but it may not even hit 15500 at all. So, but we will keep an eye on that. Let's go to the Swissy. Swissy still pretty sideways bound, like it has been for quite a while. On a weekly chart, and let's look at a daily chart. We did see a significant breakthrough up on this pair. If we are going to see this pair continue to work its way up, like we have here, we may be looking at a potential buy opportunity right here at the what is that? I got to zoom this in out a little bit so I can figure out where we're at here on price. Let's see, 9,500. So we may take a buy at 9,500 because price is going down. You can see that it's been trending down. You got a high, then a low, lower high, lower low, and now it's been slowly bit working its way around and taking it has been working its way up even before this news announcement came up. So now we have a low, a high, higher low, an even high. So we had a triple top here, boom, 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 a higher low, and then broke right through. All right, we're not gonna even count that couple of days there that we had a dip down. That was the news that forced that pair down. So we could see that this pair is going to continue to go back up. That especially if we're going to see dollar strengthening, that we could see this dollar come up near parity. Looks like price before hated coming up to parity, came up close, and then dumped off. But we could see that happen. So we may be looking to buy this pair right around 9,500. But I would just again be very careful of any U.S. dollar trades. Now let's look at the dollar yen. This pair is just going insane. Right around here. Let's see what date this was. October 5th, 2012. This pair started going sideways. The downtrend that it was looking at, and by the way, this is the weekly chart. You can see that the selling pressure started backing off. We started getting all kinds of ups and downs and some pin bars, which is meaning that we were looking at market reversals. And price was down 78.86 level. No, actually 77.78, so 7,800, and is now going as high as I think almost 102. Yeah, 101.97. And so we're talking about a oh man, I had to calculate 2,400 pip move in 7 months. It's pretty significant. And so the dollar has been still strengthening. Now, I told you earlier that I'd be careful with U.S. dollar trades. Now, here's the thing. The yen cross pairs are still doing well northbound, which means they're still bullish due to the fact that the yen has still been very weak. Even though, like on the Aussie yen, you're starting to see a base form. Yes, a base is forming, but the tops of these highs are actually working their way down. We could see it turning around and it might start going back up, but it's going to be very cautious. We did take a nice trade off at the 100 mark and cleaned house on that trade. I might be interested in buying that around there, but let's go check back at the dollar again, dollar yen. Because of the yen weakness and the dollar strengthening going around right now, I would be looking for any significant pullbacks. So this pair, any news announcement would force this pair down 60, 70, 80 pips. I would be looking to take a buy position with a 100 pip stop, maybe even 80 pip stop, and then letting this thing run up. Because historically, let's try to zoom in what we think the next key level that we might have some resistance at. We don't really have any. I'm looking at the weekly 3-year chart. In over 3 years, price has never been as high on a dollar against a yen. So let's look at doing a weekly 10-year. All right. So right in here, around the 101 mark, prices had some struggle. Also right here around the 102 mark, right where it's at right now. Price has had some struggle around that area before, so it's pretty much getting to a point where it's about to blow through these key levels, or we're going to see a bounce back down. I think we're going to continue seeing this thing go up, but I would still wait for a pullback. I would not just click in and start buying. That is not wise trading. I'd wait for a significant pullback to take a buy entry in and see how far this thing can go up. And after that, the next major levels that we're looking at, 105. This thing can easily run all the way up to 105, and then continue past that at the 110 mark. So we're looking at 500 pips a pop. So we still have a lot of room for this thing to go. What I don't like is how this pair has run up so strong for so long. I know it's hard to see this, but you just consider this. This is very long. It's a 7-month period without a significant pullback. That is not natural. And just like you can see here historically, pair will run down for a while, go up for a couple months, down, up for a few months, down, up for about 4.5 months, 5 months, down for quite a while, 6 months, back up, and continue working its way into a pattern. But this pair is pretty much just shot up with some very slight pullbacks over the last 7 months. So if this thing would ever crash, it would crash down pretty. I'm going to suggest it would probably hit pretty hard. But I do believe we still have some strength left in this. So go look at the dollar Canadian. Again, this is one very fickle pair to trade. It used to be at one point. Sometimes the Canadian dollar really gets into a range, and it's very easy to trade. I think last year there was a time where it was ranging between 1.0050 and about a 100 pip range, about a 60, 70, 80 pip range most of the time, but as high as 100. And we would literally just sell the top of the range, buy the bottom, sell the top, buy the bottom, sell the top, buy the bottom. We don't really have much of a range-bound market right now, which I know a lot of traders hate. They are more interested in trending markets, but personally I do better in range-bound markets because my trading style is just a little bit different. But we're not seeing that right now. And again, overall, if you look at the weekly chart on the dollar Canadian, it's still it's pretty messy, and we are still kind of working our way down. But on the daily chart, because especially with what just happened recently in the U.S. dollar news, we could see this pair shoot up pretty significantly. Aussie dollar, wow, what a dump off. What a waste of an amazing trade. Again, we bought right here at this line. The pair hit, shot up pretty significantly, and before we got a chance to close out our profits, it just puked. I mean, it dumped off, and we got stopped out on that trade on Friday, actually. But anyway, that happens. But I do expect that this pair is going to continue dumping off. There's too much news affecting this in a tremendous way. I think it would definitely go down to almost to 9,800 mark before we start seeing a pullback on it. Let's go to look at the pound yen. Again, the pound yen is just cleaning house. Just moving up, 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 up. I would love to take a position right here at the 150 mark, but I don't think we're going to get a pullback to that level. So, potentially just keep an eye on how the pound is strengthening against other pairs. The pound continues strengthening. Any significant pullback, you see a big news announcement, you see this thing drop. The range on this thing is almost 230 pips a day. 200 pips a day on average. If you could see a 200 pip drop in one day from its open price, and it hits it, so that means it hits the bottom end of its daily range, you might be looking at taking a buy opportunity on that trade. Same thing with the euro yen. I think we're looking at the same type of thing, even though it's not as significant of a strengthening. Maybe the 130 mark might be a good buy. We did take a sell here, and we got a nice little profit off of that. I forget how many pips we pulled on that trade. Yeah, it was I think we sold at 130.20, 130.12. We just took 110 pips off that, I believe it was. or more, I can't remember. It was a few days back, and then we took another sell position expecting to hit this top, since it was a triple top, and instead it blew through. So it's, again, the trend is still moving upwards and went sideways for a while, and it's still moving up. And I would expect that we would take a buy at the 130. Now, the reason we hesitated here is because when you look at this overall, excuse me, the Fibonacci extension from this high to this low, the market had come up to the 127% extension. See how it held very strong. Fibonacci is extremely strong tool. It's one of the actual training courses in our trading course that comes along with our lifetime membership for Pro Signals Direct. We are actually adding a section in there for Fibonacci that's explaining how powerful these really are, especially off of a daily and weekly chart. That you do get significant bounce off those key levels, especially when they coincide with another key level, like the figure. 130 is what's considered the figure. But on this pair, I would be looking to buy this pair at that level. Once the price gets up to 13300, I'm expecting that we are going to see at least a pullback, just because that is the 162% retracement of this down pull, which and it's hit this bottom twice. So that bottom is a significant key level, and so I would just be looking for that. So I mean, a lot of the trick here is we are looking for, one, find the trend. Two, are there opportunities for shorter term trades off of key levels that we could see a bounce, take a few pips, and take a bounce. And we could see that here, even though it is a counter trend trade, that might be a great opportunity to take a short-term sell, very short, get in and out, take some few pips. I'd be more apt to take a buy position at 130 on that pair. New Zealand dollar. I'm going to hold off on this one a little bit too until that news settles. We got way too much news. This thing could continue dumping down deeper, or we could have a turnaround. Aussie yen. Same type of thing. Even though this is my favorite pair, I would definitely be interested in a buy opportunity around the 100 rate mark. Significant key level. Every time we've taken a trade off of that, we've done well. But other than that, I do see that this thing, the highs are getting lower and starting to dump off. So the next few days is really going to determine if this pair is going to start shooting its way back up. And it should, because the yen pairs are still not doing too well. So, I mean, they're doing well. I mean, the yen itself is weakening very much against pretty much every single pair. So we should still see a good buy opportunity there. Let's look at actually two other pairs. My Euro Aussie, and which is a very tricky pair to trade in my opinion. And a Euro Yen, which I love. The reason I love the Euro Yen is because once this thing gets range bound, it stays locked in solid. You can see that I've had lots of ranges drawn out in this pair for quite a while. And once this thing gets range bound, man, it is an easy pair to trade, because the euro and the pound are pretty much in correlation with each other for the most part. And they go in sync, in cycles, in waves. And then so there are still pretty significant opportunities once you find the range. And I think on this pair right now, we're seeing a base here that's so solid here at 8,400. We did take a nice trade off this recently, and now we're starting to see it slightly coming back. I would definitely buy again at 84.10, 84.12, and to take an up run on this. But keep your stop tight, your stop tight, guys. I'm trying to do too many things at once. Keep your stop tight on this, because we are seeing that overall it is beginning to weaken. This nice run up that we had, and it's going into like kind of a wedge. So I could see this thing eventually squirting down, taking a shot down. If price does break down significantly, and I can see, and we see the trend change, we would be wanting to sell as we had a pullback back to this key level again. But we'll keep an eye on that. In the meantime, I would be taking a buy off of that, but I would keep a very tight stop and be very. I wouldn't allow it to go too much further than below the 8,400 mark. just a little bit. The euro against the Aussie dollar, of course, has been strengthening for quite some time. We are coming up to the 27% retracement of. Man, I got too many lines on here. I got to redraw all this out. I need to just chop all this chart up and redo it. But it's still trading up pretty significantly. If we could have a pullback to 2800, I would love to take a buy on this pair. If we can get it to pull back to 2800. But anyway, hey, that's it for the analysis for the day. Feel free to leave your comments below, and we'll talk to you next time. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free forex training videos, and free forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.